talk credit scores specifically and how they're calculated. Well, your credit score usually determines the price you pay for your money. Mortgages, auto loans, auto leases, credit cards, business loans, etc. Perhaps the most significant part of your credit report is your credit score. Credit scores range from roughly about 350 to 850, with 850 being the best possible credit score and 350 being the worst possible credit score. Now, there are 3 credit bureaus in the US that collect information about your credit. These bureaus then calculate a credit score based on that information. This means that you have 3 credit scores, one issued by each of the 3 credit bureaus: Equifax, Experian, and TransUnion. Mortgage lenders now typically order what's typically known as a tri-mortgage report when you apply for a home loan. The tri-mortgage credit report gives the lenders information from all 3 credit bureaus, Equifax, TransUnion, and Experian, right? The lender typically uses your middle score and the lowest of the 3 scores when they evaluate your loan application and overall risk. Now, here are the 5 factors that determine your credit score. Number 1, your timely payment history, right? Number 2, your balance to loan limit ratio. Here's what that means, okay? If you have a credit card, $2,000, and you literally take out a loan for $1,000 from that credit card, that balance, when we take a photo of your score, that's obviously number 2. Number 3, the length of credit history that you have. In other words, how many accounts do you have that have been open for X amount of months? Number 4, the types of credit mix. Is it a car loan? Is it a home? Is it a credit card? The credit mix matters. And number 5, the new credit or increase. Now, I want to point something out because a lot of consumers, especially first-time home buyers, when they buy a house, they're very concerned about their score, right? They're concerned because a hard inquiry is going to impact the overall score. But the algorithm is actually a little bit more complicated than that, more complex. And simply put, Equifax, TransUnion, and Experian actually anticipate you looking for credit. In other words, you looking for a bank to represent you in this home purchase. Most consumers are very worried about their score, and they should be. They should take care of, their overall credit. But the inquiries itself, you'd be surprised how little and how much of an impact it makes in the overall score. Why do I bring that up? I bring that up because as consumers are looking for a property, as consumers are looking for a home, their number one concern is their overall credit, when it should be getting started as early as possible in case of any errors in the actual credit. I can't tell you how many times we've pulled people's credit and there are collections that they didn't know about. There are misinformation. Mom and dad have similar names that they do and their credit scores are extremely low. And they're a month or 2 out from buying a house, and now we're literally scrambling to fix these scores, to fix this credit. So it's important to not only understand how your credit score is actually calculated, but it's also important to understand that the earlier you check it, the better.